Today we're going to talk about Domino's, and I'm not talking about the pizza. The market gives us various cause and effects, and oftentimes it creates a domino-like effect that happens. So we're going to dig into that a little bit today. My name is Brian Cannon, and welcome to Markets in 5. One of the areas that we look at is called negative divergence. And this is, again, kind of keeping in that domino effect. So when you have certain things that are starting to fall, it's just a matter of time before all the dominoes fall. Not always, but that can be the case. So in this situation, you've got a stock price that's clearly heading up and seeing all-time highs. The trend is definitely up. However, you're starting to see the RSI make lower highs, and you're seeing the PPO make lower highs, and you're seeing the accumulation distribution relationship, which means essentially there's less interest in accumulating this from large institutional buyers. And then also the on-balance volume is dropping. So you've got a drop. RSI is dropping, yet you've got the stock making all-time highs. So it doesn't mean that the stock is going to roll over or die. But what it does mean is, historically speaking, these negative divergences oftentimes can be warning signs. They can just kind of sometimes forecast the future, not always, but again, there's so many stocks and so many investments to select from. We would tend to veer away from ones that are starting to have setups that potentially could have you teetering on the edge of a cliff. So we try to avoid those negative divergences and certainly look for them when we're screening for stocks. So in this chart, we also are looking at negative divergence. You can see here again, the price is having a new high, yet the RSI is having a lower high. And so this chart in general is it's one that we keep our eye on quite often. It's the relationship of growth to value. So is growth outperforming value, or is value outperforming growth? And that's important when you're looking at the stock market, because essentially, as investors are looking to deploy cash and rearrange their allocations, when growth is outperforming, essentially you want to be in those companies that are growing their bottom line, that are growing their earnings much faster, right? So when you start to see that relationship begin to roll over, then it could have an effect on the market. Maybe in the terms of a rollover, or it could be in the terms of just kind of a pause. And that's what we're in right now. So we're just kind of want to take a look at this relationship and understand, is growth ultimately going to break out, or is it going to break down? So it's got a pretty heavy support line here that we're watching. So again, just another sign that we look for in kind of making holistic decisions when managing money. So this last chart, we call it the bow tie, right? So it goes all the way back to 2001, and you can see as the dollar was dropping here, energy relative to the S&P 500 was outperforming, as was basic materials. And then 2008 hit, and all bets were off on everything. But as the dollar found its footing and began to rise, you saw relative underperformance of energy and basic materials, creating that bow tie effect. So again, kind of a domino effect. When one thing happens, it kind of leads to another. So now we're watching this level here. We've clearly broken support on the dollar. It seems to be dropping. So we're watching that very closely to determine, is that going to continue to drop, or is it going to find some footing and continue its march upwards? But essentially, we're looking at the relationship of materials. We're looking at energy, and those can also either support this move up or support this move down. So we're very closely monitoring those relationships. Those are the main charts I wanted to share in this week. Now we've got the 10-year Treasury on kind of a rise right now, and that can certainly put a damper on the stock market. So we're watching that relationship closely. We'll dive into that one in great detail once we start to see a little bit more of this march up or not. So, but if we can be of service to you in any way, if you have any questions, reach out to us, and look forward to catching up. My name is Brian Cannon, and this was your Markets in 5.